time. And I want you guys to do me a favor here. So two things when this is all finished. So I will brag a little bit. We were working on recruiting an agent last week, and I asked her if she had gotten her first payment protection plan loan. And she said, "What's that?" And it was a reminder, I would like to say, if I can say it, it's a reminder that the Select Group looks after its agents a whole lot more than most brokers, because this person didn't even know what it was. And so not only did she miss out on 20,000, she really missed out on, well, we actually helped her apply for the first one, but she's not able to get the second one at this point in time. And it's just, and we know that our agents collected actually several millions of dollars through these programs when agents in a lot of companies didn't even know what they were. Now, having said that, we have, I think, 80 people on this call. So I want you to, when we're finished, to chastise your fellow agents who didn't get on this call and who might be missing out on a whole bunch of money, because this is coming up in a very short order. There's not a lot of time to take advantage of these opportunities right now. So I said, this is St. Patrick's Day. This tie has 4-leaf clovers on it, and this is your lucky day. So let's kind of dig in right away. Starting with unemployment. Some of you may have seen this on the news if you're news watchers, but if you're collected unemployment in 2020, this is a really big deal. Well, actually, there's a couple of components. First, for people who were still receiving unemployment under the pandemic coverage, they've extended the additional $300 a week on top of the state benefits through September 4th of 2021. This is particularly desirable for some of our newer agents who might not qualify or have the income to qualify for some of these other programs. So that goes all the way through September 4th of 2021. If as a realtor, you only have to put down the week in which you received a commission check. So actually, this whole structure works extraordinarily well for realtors because you guys don't get a commission check every single week. We wish you did, but you don't. And so because of that, you can actually be collecting unemployment and working as a realtor at the same time. Now, we will get, as we get into the payment protection plan, you should not be receiving unemployment insurance while you're using your paycheck protection plan funds. So that's an important distinction. The other thing that is really big news, and it's affecting the tax filing, and there's some other news that just came out this morning that we'll get to, is that the first $10,200 of unemployment benefits received in 2020 are 100% tax-free. Nevada doesn't have an income tax at the state level, and California doesn't tax unemployment benefits. So for our entire Select Group, the tax benefits are the $10,200 in unemployment benefits are tax-free at the state and the federal level. And if it's a couple receiving unemployment insurance, it's $20,400 that's tax-free. So that can be a really big deal from a tax standpoint. That's really all I have on unemployment, but I'll stop and take any unemployment questions before we dig into the payment protection plan, if anybody has any. Nope, looks like we're good on that front. This is the first time that independent contractors have been eligible for any form of unemployment. It was a huge gift in reality on the part of the state and federal government because you guys don't pay in to unemployment insurance. As a company, we pay in for all of our employees, but independent contractors have never paid in. So all the money that independent contractors received was truly simply a gift. Now, if we dig into the payment protection plan program, it starts out, this is for this, we're going to be talking about the second draw, but we ran into last time we talked about this, that there was a first draw. A number of our agents had never, who apparently were paying no attention last year, didn't get their first draw and only applied for it recently. So if you haven't gotten your first draw under the paycheck protection plan, it is not too late you can still apply. But we're going to be focusing today on the second draw for people who already got the first one.
Yes.
And it starts out with that in order to qualify for the second draw, and a lot of people
Richard,
won't qualify because we had an extraordinarily great year last year.
I haven't.
But in order to qualify for the second draw, you had to have at least one quarter of last year that was 25% or less than the matching quarter of the prior year. Now, we're going to pull up the forms here a little bit deeper into it, but I just want to go over some general things first. Now, you can also, if you were off 25% on an annual basis, you can use that too. But what we found is a great number of our agents actually had a better year in 2020 than in 2019, but still had one quarter, because your income is not even throughout the year, still had a quarter when you lined up the two quarters that your 2020 quarter was 25% or less than the same quarter last year. So that would mean you were still eligible even if your annual income was up. So that's a pretty interesting, little tidbit here as it relates to this program. There's two forms on the SBA site. We're going to go and look at them, and we're going to be looking at the gross income form. And I'll get to that. We'll go to the forms in just a minute. One of the reasons why we pushed today's date is because currently the deadline to apply is March 31st. So that is only 13 days away. There was a bill introduced in Congress today to extend that date for 2 more months. But as of right now, the opportunity to apply for a first or a second draw ends at the end of this month. And so anybody who hasn't missed it, we've got a number of managers I can see on this call. If you know that you have agents who didn't apply last year, beat them up with a stick and let's get them moving, because they only have 13 days. Now, again, it might get extended, but we can't promise that, right? So right now, the deadline is March 31st. And we've had some interesting questions about, can I get a first draw and a second draw? And the interesting answer there is that technically you could, but you have to have used all of your first draw for the stated reasons before you're eligible for a second draw. And typically that would be 8 to 10 weeks of your compensation. So the dilemma is where we have some agents who are just now applying for their first draw, and the bank told them, well, you're not going to be able to get a second draw. And the answer is because as of today, the program is scheduled to end before they would have a chance to use up the funds from the first draw. But for people who got their payment protection plan last year, who actually paid attention and did what we recommended, are eligible now to get a second one. And what's really interesting about this second one that is such a big deal, and I will scan through here and look at some of the other pages of people on the call, is that this second one now can be based on gross income instead of net income. So we had a number of agents who perhaps had a modest net income in 19 and a bunch of tax deductions and had relatively low taxable income. So they weren't eligible for a lot of money. Well, the new formula is based on gross income, not net income. And so your ability to apply for a much larger amount of money is really significant. The other thing that has occurred in the program is that if you were delinquent on student loans, and I don't think it applies to anybody here, but had committed some other crimes, you were ineligible for this program. Well, they've changed up all of those rules now. And so if you're delinquent on a federal student loan, you can still qualify for a payment protection plan. I don't think any of you could have been convicted of a crime or you wouldn't have a real estate license. So that one I don't think we're worried about. But but we might have people who are behind on student loans and they are now eligible to apply. Now, before we get into the program, couple of other things that literally just happened today is that they've extended the tax filing deadline out to May 17th. The May 15th falls on a Saturday, so that means it would be the next work day, which is Monday the 17th. So they've given everybody an extra month to file. And if you did receive unemployment insurance last year, the recommendation is that you wait to file, because they haven't issued all of the rules on that yet. So we have people who have already filed their tax returns, didn't get the benefit of the new law, and now are going to have to file an amended return. And if that applies to you, the IRS has asked you to wait to file an amended return. It also, if you had a stunning year last year and you want to be setting up some additional retirement plans, which we are going to cover. I haven't been able to get that Zoom call put together yet. I wanted to focus on this first because of that March 31st deadline. But you've also got more time to set up some retirement plans. So you have now until May 17th to file your taxes and actually pay the amount that you owe. So there's a kind of a double benefit going on there. And my understanding is that means you can pay without any additional penalties all the way up to May 17th. So I think that's, kind of particularly good news for all of you. All right, one more item, and then we'll kind of dip into the program here. And I see Lynette's on the call from Stanford Mortgage, and I'm actually going to use a piece that Lynette put together for one of the sales meetings earlier. So I want to give her credit, and that is, does the lender need to consider a Paycheck Protection Program loan when qualifying a borrower? And the short answer is, since the expectation is that that loan will be forgiven, they do not need to calculate that into the loan qualifications. Lynette, would you like to add anything before we move on from that subject?
Well, that's actually just it in a nutshell from an underwriter, because the question was asked at the meeting, and I asked an underwriter, and that's kind of what they sent me. So it sounded pretty basic to me, but I don't have anything to add.
All right.
Thank you.
Okay, so I need to go and pick up the screen share here. To which screen I want to go to. Okay, so to get to the application, guys, it's the same as it was before. You'll just go to SBA. If you see up here, sba.gov, it'll bring you up to this site, which is the government site. They're introducing the new head of the SBA, change of administrations, but we're going to click up here where it says to apply for a payment protection plan loan by March 31st. I want to keep pushing on that date. It's only 13 days away, and you don't want to be trying to do it on the 31st and find out that the lender that you're trying to use is no longer even accepting applications. So let's get with it literally this week. So when we come down and we look at this, identify a loan type. If you or one of your agents for the managers has not applied for the first one, then it's still not too late. They can apply for the first loan, and that one does not require the 25% reduction in revenue, but that one will be based on your net profits for 2019. So we're not going to, most of you I think have already done that. We're going to focus on the second draw. And so here's our second draw loan. We're just on the SBA site, some loan details. We're just going to jump right down to the application form. So can everyone see the form? Is that a yes?
Yep.
Okay. So there's a lot here when you start looking at all these other pages, which I read through, but it really goes pretty fast. You can fill this form out in literally, probably 15 or 20 minutes. So this information up here is pretty simple. Where we're going to focus is right here, because most of you would not have any employees. So this section here does not apply. This is all we need to worry about. So what is your gross income from your 2019 or your 2020 Schedule C? Now, if you haven't filed a Schedule C for 20, then you'll work off of 19. There is a cap. Same cap as existed before. So whatever you put in here, the maximum number, well, you put the real number in, but the highest number that we're able to use is 100,000. So anybody who earned more than 100,000, they cap the program. So you'll divide by 12. If it's more than 833.33, you just enter the 833.33 into this box, and then you multiply that times 2.5. And when you do, it will give you a maximum loan of $20,833. So that's the most that anybody can actually receive is $20,833. Now, we had agents who got that much money on the first draw and are now getting that much money on the second draw. And so they're actually receiving a total of over $41,000 under these two programs. Federally tax-free, by the way. So that's a whole nother note. Now, for California residents, as of today, you're going to pay state income tax on this money. But at the federal level, there's no tax at all on all of this money. So that's a pretty simple statement. Then it comes down to what is the purpose of the loan? In your case, it's easiest really just to check payroll costs. You could check payroll and covered business operation expenses if you want, because anything from advertising to a monthly office bill, but it's generally just easy enough to check your payroll costs. They are asking you to fill in your reference here. What was your revenue in the quarter of 20 and what was the matching quarter in 19? You're the 100% owner of your business. And your business, by the way, for most of you is a self-employed individual, because that's in our world, that's what you are. You're self-employed. And let's see, our NAICS code, you know what? Let me get that for you. I didn't have that one written down, but let me pull that up. So here's the code if you want to write it down. And Jody, can you put it in the chat for us? It's 531210. That is the code that you will put in there. And that is the type of business that you are, by the way. That's what that means. That's the type of business that you are. 531210. You're self-employed, your social security number is going here. Some of you actually, so this form, if you're a corporation, you'll need to use the other form. It asks you, now they're asking a bunch of questions about what you are. You know, if I threw my little political comment in here, we're never going to get to all of this if we don't start saying people are people, but that's not the government's view. So they're asking all kinds of questions about who you are. And then they're asking questions regarding issues having to do with, you know, convictions for crimes. Do you live in the United States, etc. So it's really relatively easy to answer these questions and submit your application. And that's literally all there is to it. This is your most important part here. Gross revenue divided by 12 times 2.5. We don't qualify for the 3.5. That is restaurants. They get more, restaurants and hotels or accommodation businesses. So they can qualify for more. Ours is the 2.5. And 2.5 times the 8,333 equals that maximum of the $20,833. So you can see where that number comes from. And that is literally all there is to it. It's pretty simple process. let me look at some of my own notes here. So would somebody like to fire off any questions to us at this point?
I have a question.
Yes.
So I already received my second PPP loan draw. But that was done off the net, not the gross. So can I reapply?
I have looked, I think that was Andrea's voice, if
Yes.
I actually know my agents well. I know some of
Yep.
the voices. That's pretty funny, actually, I think. But that question has come up, and I think I'm going to have to direct you back to the lender, because it's really an unfairness. They came out with this program, and then they come back just a little while later and say, oh, well, we're going to switch it up and let you apply for a whole lot more money, and haven't identified the question of, well, what if I already applied and got a lesser amount? Can I reapply? We have not been able to see that answer so far, Andrea. So I'm going to have to direct you back to the lender at some point. And just the fact that Congress, as of today, or the IRS as of today, extended the tax filing deadline. A bill was introduced today to extend the March 31st cutoff for 2 more months. As you can see, these things are just constantly changing. And they came out with the second draw program, and then they switched it up to allow for this gross revenue opportunity, which is, if anybody who made more than 100,000 last year, it didn't make any difference. If your net income in 19 was 100,000 or more, you're getting the same amount of money either way. But for agents whose net income was less than 100,000 in 19, but perhaps their gross income was 100 or more, they're eligible for a great deal more money under this new gross income program than they were eligible to receive under the net income program. So there's a question in the chat. Let's see, we did the code. If we haven't filed our 2020 taxes, but we know our gross income. Well, number one, if your gross income was above the 100,000 in 19, just use 19, because it doesn't make any difference. And if you, but I want to go back to the question. If we haven't filed our 2020, we know our gross income. I'm going to look at the form on that question a little bit, because it's asking, I'm sorry, I got to get to the right form. It's asking IRS form 1040 Schedule C, line 7. So what we had some agents do last year was complete their Schedule C, but not file it. So they went ahead and completed the Schedule C for 2020 and used that number to apply with. And we did not have a problem with that. So even though they hadn't filed all of their income taxes, they still had the Schedule C from their business, and then for a lot of you, of course, you have your business, but you might have a rental, you might have a spouse with payroll income. So you've got all these other complications around filing your taxes. You might have now had unemployment insurance, but you could still do the Schedule C for your real estate business, because that's all old news at this point. It's last year. And then you can use that number on the Schedule C to file for this program, even though you haven't actually filed the return yet. The other area, one of the other reasons they're saying to wait for those of you who have young children, is that they've come out in this latest act with a whole bunch of refundable credits for, I think, children up to the age of 6, $3,600 for the year, and children from 7 to 17, $3,000 for the year. So people with children living at home are also going to get a bunch of additional money above and beyond the stimulus payments that are going out right now. And that's just another one of those areas where they want you to, where they don't have the rules written, so they're giving that additional month to file tax returns, because the accountants practically can't file a tax return. The IRS is saying, oh, file your taxes. Oh, but we haven't written the rules yet. So that's a mess. There was a question, will the PPP second draw be forgivable just like the first one? And the answer is yes. And there's a comment about not having to reapply for EDD. I believe that that is correct. That's what I've seen and read also, is that the EDD will automatically extend you out. But I want to remind you that you shouldn't be receiving unemployment insurance for all of the same weeks that you're using your payment protection plan money. So there's a question there. Now, if you didn't get that right, I don't know that you're going to get audited. I'm not going to tell you it's okay, but you may not have to deal with it anyway, simply because the indication is they're not going to audit these smaller loans. But the advice that we have to give is you should not be on unemployment and using your payment protection plan money at the same time. So this might end up being a relatively short Zoom here. Who's got some other questions for us? I don't think I'm that clear on my explanations.
Can you do a little briefing on how you request the forgiveness?
So the forgiveness forms, you'll go back to your original bank, and the bank will or lender, and on their websites they will have the forgiveness forms. And you can apply now for the forgiveness on the first one. So if you got the first one last year, you can go ahead and apply and have that one forgiven now, even while you're applying for a second draw. But the forms, and they're relatively simple. It's going to ask you, what did you do with the money? And the answer to that question is going to be, I used it for my own compensation. That's what the purpose of the program was. That's what you use the money for.
And how long after you get the money do you apply for that forgiveness?
You can, it has to be, there's two choices, either 8 weeks or 24 weeks as a minimum. So once you're past, and most people are using the 24-week rule. And so once you're past the 24 weeks, then you can just go ahead and apply.
Okay, thank you.
Hey, Dan, do we know what, if there's any credit requirements, FICO score, et cetera?
No, none at all. There's no collateral. It's 100% federally guaranteed. So the bank who's making you the loan has no risk of loss either. So if somebody got the loan, couldn't get it forgiven, ended up filing bankruptcy, the bank is made whole. And so there's literally no qualifying other than filling out the form. But you do need to fill out the form honestly, obviously.
I think the only one is if you're in active bankruptcy, I don't think they do it.
I think that is correct, Vera.
Hey, Dan, I had to reapply for the EDD and it worked, and I got the California additional money, which I was surprised.
Oh, that's interesting. Yeah.
So I was like, oh, actually it was on hold. I answered number 6 wrong. I said no, because I wasn't working over January 7th on that week. And then I put in that I got my check, and then that locked it up, but I kept certifying. And then she just called me a couple days ago and went over everything, and she released the funds. And that's when the money came in with the additional.
Wow.
Good. So there's a question in the chat regarding explain the bank. So a lot of the local community banks have done these. We have found that those are great sources, but also other sources out there. There's just a number of internet-based companies that are also doing these. I have to stop and think. I had them in the notes from the prior meeting because there's actually, if you just type in to your Google bar payment protection plan, it will pull up a bunch of lenders. And on the SBA site where we just were, there is also a list of lenders available. I think most agents found that if you don't have a connection with a local community bank, that it was easier to go through the online portals than the big banks like, thank you, Candace. So she put in too that we have a bunch of agents used Fund box was one, cabbage was another one spelled with a K. She has the spelling correct in the chat. The local community bank in Chico, I know, is taking care of a number of our agents. The bank of which I'm on the board of directors, Suncrest, took care of a bunch of people. But the online lenders really did a great job and they were very efficient.
I had a question, Dan. I did not apply for either of them. So if I were to do this, then I would obviously click on the first one, right? And
That is correct. You would click on the first application, not the second one.
do I use, for that one, do I use 2019 instead of 2020? Or does the application look the same as the one you just showed us?
No, in fact, let's go ahead. Let's go ahead for you and go back. So this is the gross income form, but we're going to go back and so second draw here. I just want to keep hitting on this date, right? March 31st. Don't let the grass grow. So we've got first draw loans here. If you have not received a PP loan before, first draw loans are still available to you, but those are based on a whole different formula. And so that formula is based on net income.
Dan, are you pulling that up? Are you sharing? Are you going to share that?
Oh, I'm sorry. I stopped sharing the screen.
Yeah.
Let me get back to it. Thank you.
Hi, Dan, it's Vera again. I hadn't applied for the first one and I had done it through Biz2 credit and they sat on it for like 6 weeks and PPP told me that had been approved in January. So I had to go through all kinds of channels to get them to cancel it. And Mechanics Bank actually did it within 3 days. And there is a new form, even if it's the first draw, to use your growth.
Well, that's what we're pulling up right now. I actually didn't look at the first draw form. So am I screen sharing at this point?
Yes.
Okay.
Yes.
So let's go ahead and pull up that application. So first draw borrower application. So here, again, you're a sole proprietor. This, your NAICS code is the same. There's no change there. You know, what are you covering? So here's your average monthly payroll times number of employees. Now, in your case, there's number of employees is 1 because you're a sole proprietorship. But this form, I think we'll have to go back and look at the directions, but they are here because the formula last year was net income for a sole proprietorship. Net income divided by 12 times 2.5. So your average monthly payroll number was your actual net income. So if you grossed 80,000 in commissions, but you had 20,000 in expenses, then your net income was 60,000 divided by 12 months meant that your average payroll, which is just how much money did you earn yourself? So your average payroll became 5,000, 60 divided by 12. And then 5,000 times 2.5 meant that you were putting 12,500 in here on the size of the loan that you were going to receive. So I don't see that they've changed that formula. But I will tell you that I did not read all of these pages back here for the first draw plan. So it's all there on the SBA site. Take a look if you didn't apply. But again, we want you guys to move quick because there's only 13 days left. I do think Congress is going to extend it, but I think we should just get cracking and not count on Congress. There's also a possibility, by the way, for those of you who are just now applying for your first draw, that you could use all of the first draw in the 8 weeks if they extend it for 2 months, and you would have then about a week and a half to squeeze a second draw in right at the tail end because you would have had 8 weeks to use up your payroll. So getting the first application done immediately, if you haven't done that, is super important. And
And that first one is for 2019, right? Not 2020.
the first one is was based on 2019 net profit. That's
Okay.
correct.
Okay, thank you.
And so Tori just put in the chat that that House actually already passed it. So when I looked about a half hour before we got on this call, I saw that the bill had been introduced, but maybe they're just moving that quickly to extend the dates. I would still say don't wait, right? Get your money. And it's particularly important for people who are applying for the first draw, because you might be able to squeeze the second draw in right at the tail end of May there. Okay, do we have any other questions? All right, who's going to go get themselves some additional money here? All right.
Oh, Dan, there's one more question. How do I find my first loan number?
You should have the loan documentation, Gina. That's all I can actually answer. So whoever did the loan for you, you've got loan documentation that you had to sign.
And then Michelle wanted clarification. Michelle, do you want to unmute and
Just that we listened to you at the very, very beginning and applied for the PPP and the EDD. Got them both. And then later you said, oh, you shouldn't be using them both. So
Michelle, I think you're still fine, because the question was, you could get both, and we had a lot of agents that did, but you just need a long enough period when you weren't also getting unemployment to be able to use up the payment protection plan funds. So if you're still getting unemployment, kick yourself off.
we stopped at the end of the year.
But if you dropped off at the end of the year, then you've had time to use up your payment protection plan funds.
Even though we had a really good year.
So I think that it was fine to get them both. It's just that you have to say that you use them during different time frames. That becomes the key. And you only needed 8 weeks of time frame to use up the paycheck protection plan money. So as long as you haven't been receiving unemployment for a period of time, then you're okay.
So
that's my reading of the rules.
So when we apply when our CPA does our taxes, he's going to look at all that and just try and decide what's good, what's not good, and what we owe, if anything.
Well, some of it rolls over from 20 to 21 too, because if you were receiving unemployment all of 20, then can you be using your paycheck protection plan money in early 2021? And I believe the answer to that question again is yes. But do talk to your tax advisor.
Oh, absolutely. He's going to go, what did you do?
Yeah, I think the most interesting thing for a lot of us is the likelihood of getting audited on this is pretty close to non-existent. But that doesn't mean we're advising you to do things that aren't in compliance, right? We would never advise you to do that.
And most of us as realtors have never ever used unemployment.
No, we were never eligible, right?
And then you get a big, huge commission, and you can only put down that you got $999. Like, wait, this isn't right. We got a lot more than that. So it's interesting.
Yeah, I wasn't eligible anyway because I kept working the whole time.
Well, us too.
All right. Have we wrapped up our questions? I'll stick with it as long as someone has a question they want to ask. All right, the applications are there on the SBA.gov site. You have a couple of places to go that were in the chat. Also, your local community banks are great sources. Mechanics Bank is actually a big bank. We heard from one of you. And so if you've got a relationship in existence with a big bank, if you are, actually one thing I didn't say is that you would normally go back to wherever you got your first draw. So for all of the second draw, just go back to the same bank that did the first one or the same source. If you're just now applying for the first draw, use one of those other sources. But if you got the first one, go back to the same lender because they have your file already. All right, again,
Thank you.
do me a favor if you would, guys. Talk to your fellow agents. If you see them in the hall at next week's sales meetings, managers who are on the call, talk to your agents because we obviously don't have, 800 agents who are on this call. And I think that we should because people are really missing out on a great deal of opportunity here. And we don't want them to do that. And if nothing else, if it goes into your retirement account, then so much the better in the long run, right?
Dan, thank you. I have one last question I thought of.
Uh-huh.
You mentioned for the round one, we had 8 to 24 weeks to use the money. And then
Correct.
that sounds like that's the same second round. Before we're supposed to spend it by December 31st. What's our deadline for round two?
It's the same 8 to 24 weeks.
Is there a final date we have to have it used by? Do you know?
Not that I've seen, but I think I would want to have it used up by the end of this year.
Thank you.
Okay, guys, I guess that wraps us up. Again, talk to your fellow realtors in your offices and managers, talk to your agents so that people don't miss out on this opportunity because it's just too great an opportunity for them to miss out on.
Thanks. Happy St.
Take
Patrick's
care and have a great rest of your day.
Thank you.
Thank you, Dan. Nice to
Thank
see
you, Dan.
everybody.
Thank you. Thank you.
Happy St. Patty's Day.